Okay, let's get started. So hello everyone and welcome to another Ask an Expert webinar. Today we'll be focusing on managing project financials, which seems to be a super popular topic at the moment. So we've just decided that we're going to split it into two parts. So today we'll be talking about the battle between PMs and financial departments, and we'll also be answering a lot of your questions that you sent in. And then in next month's session, which we will still confirm the date for, we're going to be taking everyone through a client example and see how we transformed their project financials. Just before we get started, I'm going to hand over to Liz to do an acknowledgement of country. So over to you, Liz.
Thanks, Gemma, and thanks everyone for coming along to the Ask an Expert today. My name's Liz. I'm the Marketing Director at Sensei, and I was born and grew up on Wurundjeri country, where I and my family now live and work. I would like to acknowledge the Wurundjeri people of the Kulin Nation as the traditional owners of the land from which this meeting is being run today, and I'm very grateful for their ongoing care of and connection to country. As we come together today, we're drawing on the rich storytelling history of the world's oldest living culture to share knowledge with each other, and we pay our respects to all Aboriginal and Torres Strait Islander peoples. Thank you for that, and I'm going to hand over to Mark and Ryan, or Gemma, are you going to do a bit of housekeeping first?
I will just run through. So just as always, if everyone could please keep their microphones on mute while the presentation is going. If you do have any questions, feel free to use the raise hand tool. Otherwise, you can type your question in the chat box and we'll get to you. But other than that, I'll hand over to Mark and Ryan, who will be our experts for today. So over to you guys.
Thank you, Gemma. Hey, Ryan, huh? Money, money, money.
Show me the money.
Show me the money. It's always the interesting one, isn't it? Interesting. And then also always the hurdle that we have to overcome when it comes to satisfying different roles and different requirements in an organization. So today we have the pleasure of outlining everything around finances, and of course, sorry, can you just mute everyone, Gemma? And of course, that also means that we could talk on that subject for years, really. So we've broken it down into two parts. This part today really goes more around process definition, reasons why we struggle with finance, and then the next time we will talk about around some nice examples. Now, this is a super engaging session. First of all, thank you so much for everybody who has sent in so many questions. It's mind-blowing. So we decided to incorporate them into our presentation. Now, before we start though, can I please have a poll up just to get a little bit of a feel of where you manage your project financials today? Is that in Excel, in MS Project, or within my PPM solution, or you may not even manage any financial information? Would be interesting to see what the audience is doing at the moment.
Interesting. I thought Excel would have had a massive lead, but it hasn't.
Yeah, look at that. Yeah, yeah, it's coming. It's coming. Yeah, well, PPM solution, that's good. 38% Excel. So as we can see, we have 85 people. We've got 46 respondents. We can have a little bit more, just a tiny little bit. Well, it seems like the trend is going really into the direction, of course, of Excel. Surprise, surprise. However, closely followed by a PPM solution, and that's great to see. Now, as I said earlier, we have a multitude of questions. We had so many questions coming in that we didn't want to just have ask the Q&A at the end, but we have when you see this little box, this purple box in a presentation slide, these are direct questions from you guys, and as we go along, we are trying to answer those. Now, before we start with the details of finances, I thought it's a good idea that we really just inhale why financial information is so important for us. Well, and I want to outline this in two different ways. On one way, ensuring that we are doing the right work, meaning that the work that we as an organization need to accomplish is the most effective one against my organization. But what exactly does that mean? Every organization has, of course, strategic goals, and when we think about the work that we need to conduct, we always try to execute that strategy. Now, the way that this happens is through a whole different ways of work in intake funnels. This could be ideation, this could be a business as usual operational stuff, could be a business case, could be a project proposal. Any type of work that we need to conduct flows into an intake funnel. And what we as an organization have to do is we have to manage our constraints. Well, organizational constraints are actually, I guess the Mr. Bad Guy in terms of accomplishing all of our dreams. Because if I wouldn't have any internal constraints, that would mean I could do just anything without needing to consider that I don't have enough money, that I don't have enough time, that I don't have resources available, and of course that I don't follow potential risks to my organizations if I don't do certain type of work. Now, I highlighted the financial component because ultimately when it comes to realizing work from an organizational perspective, it's super important to understand, can we actually afford what we want to do? So we go through this intake funnel, and then ultimately we come up with our initiatives, or I like to call it finding the best or most effective way to determine our path of how we want to accomplish our strategy, either through project program portfolios, through operational work, or through a multitude of different things. Now, again, this financial component is super important because in most organizations, even though Ryan, we saw in the poll that actually quite a lot of people do not manage their finances. I wonder who. I'm sure somebody manages those, and I would think finance department probably, huh?
Look, ultimately, money is the one finite resource. So the project exists in this context of doing the right work in that organization. Someone has to be tracking the pennies somewhere.
Yeah, and look, I would almost say that finding the right work can probably be the fun or easy part, as I like to call it. But then once we have found that work, doing that work correctly is actually the key. And in the financial world, that of course means that we need to follow a whole bunch of different rules. So once we know that our initiatives, whether these are again BAU, project program, portfolio items, once we know them and we start to execute them, we need to always provide a certain amount of content at a given point in time. I like to call that formalizing the current status quo. Now, every department more or less has that, and in the financial world, that of course also is always a very important date for an organization, and that's really what the month end is all about, right? Closing the books means really nothing else but formalizing the current status quo of where we are in our financial position in an organization. So I just wanted to outline the importance of that financial part. And really, if you would be a project manager and you had a wish, Ryan, what would that wish be in terms of what don't I have to worry about?
I would obviously not want to have to worry about spending or tracking the detail on that spending or aligning my view of the spending to how finance views it, which could be entirely differently.
Yeah, that's a very good point. And look, in order for us to overcome those, well, I like to call it competing interests, we need to make sure that we understand actually what financials means. And I thought I'll put a bit of financial metrics together. I know this is very rudimentary and most of you will definitely know this stuff. But really, when you think about it from the essence perspective, when we are talking about finance, and I'm going to put this into the context of cost. I know there are, of course, also organizations that need to track revenue in a project, you know, service organizations, etc. But I'll just leave it in the context of cost, but you can translate that to revenue, of course, as well. And when we see these are the three important foundational values of a cost is my budget, how much am I allowed to spend, my forecast, what do I think I need in order to complete my work, and the actuals, my historical accurate tracking of the things that I've spent. The hard part becomes when we need to think about time. Time for us means, well, I need to have an accurate position of what happens previously. I need to understand what I'm currently doing. and I need to understand my future years. And that's where all of these different data segments come based on the foundation of actual forecast or budgets over time. So year-to-date actuals means it's the actual spend that I've done in my year-to-date in comparison to the total actual. That may be actuals over 3 or 4 or 5 years. The total estimate at completion. An estimate at completion is really predicting the outcome of the financial position in my projects by looking at my actuals and looking at my remaining costs. And as you can see, it always comes from these base information sets. That makes financial management actually, well, I'm going to say black and white, black and red, I guess. These are numerical values that we can interpret very nicely, which is great. Now, going beyond these matrices, and again, you know, if just for a project program portfolio manager, as much as for an executive, as much as for a finance team, there are really the main components: my budget, my forecast, my actuals, and everything around that. So in an organization, when we think about finances, as you quite rightly said, Ryan, as a project manager, I couldn't really care, not that I couldn't care less, I wouldn't mind not having to worry about finance. If this wouldn't be an obstacle, hey, that's great, right? We'll just go full steam ahead. However, there are, of course, competing interests in terms of these target audiences. And there are a couple of first questions that come about, you know, how to better manage project financials. Well, it's a very open and controversial questions, but ultimately, I think it is understanding the purpose why we track certain areas in certain categories and certain timelines, and ensuring that these processes are actually consistent, right? The issue often occurs that the rhythm of a project and the rhythm of finances often do not align. How often have we seen that organizations do a monthly project status report? And if you really nail it down and ask them the question, why don't you do it weekly? Why do you do it monthly? It always comes back to the point that actually the process of finance department means month-end closing, and that's when I give you an accurate position, right?
We also see project managers running spreadsheets on the side to close that gap where the rhythms, the PMO's reporting period, the finance reporting period are off by a few days.
Yeah.
The project manager's got to sit and work out where does the money go and work that out, which just makes life hard for them again. So
Yeah,
it's competing interest and stress.
Yeah, exactly. And I'm actually going to talk a little bit more about that timing question because, you know, we hear terminology like CapEx and OpEx. We hear, you know, accruals. And again, if you ask a project manager, hey, can you tell me what an accrual is? Well, many of them can't because they're not accountant, right? For them, it doesn't matter. That's the money that I spend. Do I actually have the evidence, the invoice for it or not is another question, right? So that's really also the second part where we say, well, what are the reasons for causing the battle between PMs and financial departments? Well, processes that are misaligned is one of those reasons, but also understanding why we capture those actuals. And I think, you know, if I think really hard about it, project managers manage financials to inform, on one hand, the organization's the position of the project, but also informs the finance department on the needs that finance requires. So what does that in detail mean? Well, a finance team needs to understand the difference between CapEx and OpEx because of tax reasons, right? Because we can depreciate, we need to depreciate CapEx spend, but we can write off OpEx spend straight away. So these are one of those examples where I, as a project manager, well, I just know I've spent it, but my finance department needs to know, hey, what am I going to do with those costs and how am I going to fulfill my financial process behind it? That's why a lot of these things actually happen because of that misalignment. Well, talking about terminology, I know we can talk about financial terminology again all day, but there are three main terminologies that I want to outline, and that really also outlines ultimately the why we as project managers or program and portfolio managers need to manage that. Again, the concept of We call it categorization of financials. This could be represented through a cost work breakdown structure or categorizations. It ultimately comes down to the point of where do I distribute my costs so that I can be most effective in terms of tax, or the way that I distribute that so that I follow certain legislation, for tax purposes. So that's the reason why we as project managers need to understand, hey, when do I post this into an OPEX and when do I post this into a CAPEX? Again, that's where the alignment of the business processes need to be. Often project managers actually don't know whether this needs to be an OPEX item or a CAPEX item. How do you think this can be communicated best, Ryan?
It's not so much communicating, but almost removing choice so that they're guided through this and they don't have to worry about too much. It's about standards, accounting standards, because every organization does it differently as well. That's my view of it. It's not like Robert's just put in the chat, detail it in the budget so that they don't have to think about this. I have many clients who are trying to remove the human error, or finance comes along and says, look, while you are doing this for the PMO, can you remove our need to keep fixing everything they've categorized incorrectly?
Well, and that's spot on. That's actually the reason why the project manager does it. They're doing it because the business process, the finance department needs to have that information. Now, some organizations actually have a financial controller who does that for project managers, because they say, well, we need to be really strict about that, especially utility organizations where CAPEX and OPEX is just super important. Well, the other part is accrual, right? What's an accrual? Because, for a project manager, I've spent money, and I know I've spent that money. I don't really know what that means. Well, an accrual is where I, as a project manager, know that I have spent something this month in this period, but I haven't received the evidence of that. So I haven't received an invoice for it, for example. So I need to tell my finance team then, hey, in this month, even though you don't have the evidence of the invoices yet, you will have to post an additional $100,000 because the invoices will come in the next couple of days. And of course, for our finance department, it's super important to understand in which month have I actually spent my money. That has, of course, ultimately then also to do with future trending and future parts. And again, ultimately, it has to do with cash flow forecasting or cash flow management. Any organization that has a wonderful balance sheet and has a great profit and loss statement, but has no money in the bank, is just dead, right? Liquidity is key. And that's why we as project managers need to give our finance department very often our forecast cost for the next 3 or 6 or 12 months. And we have to revisit this on a regular basis, because for a finance team and for a CFO, for them, it's super important that they say, hey, I need to make sure that I have enough money in my bank so that I can pay my staff and pay my expenses. And that is actually the reason why cash flow forecast and from a project management cost forecast is of course super important, because it's not just one project that the organization runs. It runs, of course, many different projects. Now, if I now translate that from a project management perspective of, well, what does that mean? How do I need to manage that? Look at the amount of actions that I, as a project manager, need to take in order to manage my financial position and satisfy the need that my other departments have as well. And that starts with, hey, I need to check my actuals. I need to provide the forecast for my cash flow. I may need to manage my changes, like change requests. I may need to manage variation, saying, hey, I've spent more this month, but I need to make sure that I spend less next month. The categorization of the cost is really a need for finance, not so much a need for the project managers. And again, I understand this is a very general statement, especially large infrastructure projects. That's where it also is super important for project managers, of course, as well. Now, let's look a little bit more into the financial roles and how we need to satisfy them. And I'd always like to start at the top with the CEO. Well, the ultimate need that a CEO needs to cover is I need to make sure that we are in a financial position that the business doesn't go broke, really. From a CFO perspective, well, they need to make sure that they follow tax laws with CapEx and OpEx, and that they ensure that there is enough cash flow in the bank. So therefore, forecasting those costs is super important, and the allocation to the costs in that particular period in time is super important, so that we know next time when we do budgets that we have those actual figures accurate. On the other hand, from a PMO perspective, in your view, Ryan, what is ultimately the PMO responsible for? And I'll put PMO into the general basket. I know there are strategic PMOs that define the budget and all of those, but when it comes to an operational PMO, what do you think are the main reasons what their interest is in finance?
I'd be interested if anyone else wants to drop their views into the chat, but I see the PMOs as responsible for ensuring that projects are staying in the budget before that problem bubbles up further. Also for reporting on or creating that visibility and that forward warning if there is going to be a problem. So it's the guardrails, while the money isn't quite real, if that makes sense, because when it gets to the CFO, it becomes real and now it's a problem you can't come back from. And that's reporting and education and help to project managers.
Yeah, it's the body that coordinates and governs the accuracy of the position. Exactly. And I think that's really, how often do we say, hey, PMOs are toothless tigers, right? Lots of responsibility, very little power. Well, this is actually one of those main activities where we need to satisfy that all of the initiatives that we are managing, that we understand what that does. I think this is a big portion of the PMO, and I have seen that PMO again managing the whole sort of accrual process and even the classification of CapEx and OpEx process for project managers. Oh, and then of course we have a project manager, a program manager, and I put program and portfolio into the same basket. It really is right now a hierarchical view where I need to make sure that if I have a top-down budget allocated to my program, that I can actually distribute that to all of my projects or sub-projects in that program, and that I can balance that budget based on the forecast and the actuals that I receive from all of my sub-projects. So for them, it's really about making sure that I have enough money till the end of that program, where accruals and classification may be a secondary part for their role.
It's also a bit of closing the loop is the way I see it. So the project manager may be very focused on just getting their piece of work done, but the program manager is starting to think about what the CEO is thinking about, in that, are we meeting this basket of projects? Are they within the budget meeting those strategic goals? So it sort of starts coming back around again.
Yeah, it absolutely does. And again, when I think about it in the context of our work management solution and capability, these are the different roles that we are trying to satisfy. As long as we understand that string of financials from top to bottom, and as long as we align those processes, then you can actually automate a whole bunch of financial information, especially financials, because there are numerical values that makes it actually prone to be super efficient when it comes to optimization. And we'll talk about that a little bit more in the integration component that comes a little bit later. However, I want to outline a couple of questions that came about, Ryan, and what I did is I actually put that sort of, I classified the questions in order to associate them to the different roles. And I thought we're just going to go through some of them, maybe show some examples as well throughout the demonstration. I know I have got a demo at the end, but I want to actually outline this as we go along here. So let's start with the executive, right? The C-suite. Well, as we know, the ultimate goal and the ultimate responsibility of a financial of a CEO is to ensure that the organization doesn't stop working. Well, and money is, of course, one of those very big contributors. I know they have other things to do. I don't know if their staff goes on to strike and all of these other parts. So as a CEO, you really have to, have to balance all of that. But financial position is actually the one that is super important. So when I hear, how do you encourage ownership of financials? It's a very good question. I thought we need to understand ownership of financials on what level. So the ownership of a project manager to stay within their budget is a given. The ownership for a CFO to provide a position in an organization that is trustworthy, plus the ability to ensure that I have enough money on my bank, is their responsibility. So really, harmony or ownership has to do with process and with process governance behind it. What are some of the characteristics of organizations that have sound financial managements for projects? What do you think? What are some characteristics?
Who's doing it really well? Does anyone want to jump in and comment on it? I think part of it is education to make sure these layers interact with each other. So the ownership, if you can understand why the layer above you sees it as important, you can buy into what they're trying to do. So it's not just a selfish view of it. Does anyone want to drop into the chat or comment on what's really working well for you?
Well, while we do that, let me give you an example. And again, I'll just put a couple of report examples up so that we can see the view from an executive's perspective, right? So what I'll do is I'm just going to swap over and I say, okay, I've got, let me just go into a report. I'm an executive. I know I have strategic portfolios and I have allocated a budget to that. That financial position I want to understand, and I want to make sure that I have an overarching picture of all of my finances. So here we've got 4, and there is actually a level above that from a reporting perspective, but I want to keep it in the context of project portfolio management. So we have the ability here, of course, to see how have I distributed my budget amongst my portfolios, how have they forecasted, and what actual value has happened. And isn't it interesting? This is a large organization. Large organizations notoriously underspend. Why do you think that is? Any idea? Why do organizations underspend budgets? I know there are some overspend problems too, but actually large organizations have an underspend issue. Vindhya.
It could also be as a result of inaccuracy. Could result in under budget. So if they put in the wrong amount, then it's giving the wrong result, and also perception as well, because no organization wants to really go over, right? So yeah.
Yeah. So what I'm hearing is it is almost a learned behavior from the organizational point of view, because we are fearful that we may get into trouble by overspending.
Yeah. Correct. Yeah.
Yeah, I'm sure that's definitely one of the main reasons. Well, another one, in my view, is we always plan optimistically. We always plan best case.
There are a few comments in the chat on different ways of describing optimism. Yeah.
Yeah. So that's, I can see it. Yeah. So this is spot on, because we always say, hey, if I have the choice, that's what I would do. But then reality hits us, and actuals come in, and delays come in, and bottlenecks come in, and that's why that is actually one of those reasons. However, as an executive, I want to know that in general. So here I can actually see that, okay, at least I know that I have enough money for my budget and there is an underspend, so I don't have to worry about liquidity. However, at the same time, they can say, well, the money that I have in my bank right now that isn't used could be used for something else, and I could become more effective. But how do I do that? Well, I, of course, have the ability to look at it from a portfolio perspective, or I could actually decomposition my information, where I want to have a big picture view and want to be able to drill down. So let's say I'm a CEO and I come into the organization and I say, okay, right now we have a total budget of X amount. Well, who is the biggest spender on this budget? Oh, look at that, my R&D portfolio. So according to my strategy, R&D seems to be really, really important for that organization. Let's break that down. How is that spent? Okay, there's a program, an acquisition program, but actually it is a whole collection of different projects that I have. And again, I can differentiate those projects. Oh, commercial construction, well, that this is the most expensive one, kind of makes sense. It's a big CapEx. Again, building is a CapEx. And hardware means that I need to write that off accordingly. And I look at this is actually me building that construction. So I really have the ability to have that big picture view and bring this down. And that's really ultimately what we are trying to achieve with the financial position, where I can then compare my budget, my forecast, my actuals, and all of those variations behind it. Ideally, you want to then, of course, be in a position where you say, okay, here's my R&D portfolio. Why don't I just drill into this portfolio status? And now I have my actual portfolio status with my trends, etc. But because a system or a digitization of business process occurred here, I now have the detailed position for this particular portfolio, and I can see actually in December 23, they actually have estimated a higher forecast than a budget. Why is that? Okay, these are all of the projects, and here are all of the variations of that. So clearly this commercial construction project here isn't quite right yet. Let me have a look. And again, you can break that down again into those areas. And this really is that financial grooming that I need to have in order to, on one hand, satisfy the completion of my project and the fulfillment of that budget, and at the same time fulfill the obligations that a finance team has to fulfill. So just wanted to make sure that we get that. I'm conscious of time, so I'll move on a little bit now from a finance department, and that's really what we're talking about, competing interests or the perception of that, where the project manager often says, well, look, I really don't know why I do those things, and I just do that to feed them up. Well, look, in some ways that is actually the case, right? We are helping our finance team to classify the costs that we produced in our project or in our initiative, so that we have that overarching financial position, because let's remember, the captain at the helm needs to make sure that they plot the right course to fulfill these strategic goals. So how do you convince finance department that there's a difference between project accounting and financial accounting? Well, that's the reason why we are here today, really. You know what? Okay, being a long time ago from the finance world, I would call it the other way around. How can because it's actually finance who is the driving factor here. How can the finance department communicate in the most effective way a process so that the project manager or program and portfolio manager understands why they need to classify that information? So I actually think it needs to be led by finance. What do you think, Ryan?
I agree with that for two reasons. One is you won't beat finance. Ultimately, finance and executive management are a lot tighter and focused on keeping the company afloat than you are. Yeah. Secondly, if I go to any country in the world and I talk finance, they all understand the double entry system. It's all the same. If I go to within 30 kilometers of my house, any company, they all do project management differently. Mm. So it's one is a fixed object, the other one can move. So sorry, but finance actually, as much as we see them as a pain, we actually just have to align to them to a large extent. Now, yes, there's a lot can be improved there, but I think the PMOs have more ability to change.
And we'll show how we can improve that from the digitization perspective. The important bit is that we understand processes and that we understand that these processes need to align at a given point in time. But as Steve here in the comment quite rightly said, you won't beat finance. Yes, there's a truth, and we just need to do that. How often did we say, well, as a project manager, I think I've spent $100,000, but as a finance department, I think I only spent $90,000. Well, the actual truth is that the project is actually accurate. The variation is the accrual, remember? So, you know, it's the holy grail is the profit and loss statement in any organization, because we need to pay our people. How to better account for OPEX and CAPEX, I think, was sort of the question. We already outlined that, the understanding that, well, actually cost is not equal cost. Cost from a tax perspective means that I need to keep some of them in my books, and some of them I can allocate to expenses, and therefore my tax position is different. And that's ultimately why we do this. So the finance department needs to absolutely understand write-offs and depreciation. They need to understand cost distribution in terms of, have I allocated the actual cost to the right project, to the right department, to the right resource. And again, the most important part, ultimately, no matter whether you are a small company or whether you are, I don't know, Microsoft, if you don't have cash in your bank, you can close the doors, and that's ultimately the truth of it all. And then, of course, project managers, finance managers need to somehow reconcile costs. So, you know, raising purchase orders, approving invoices, all of these things that we as project managers have to actually do are forming that truthful picture of finance. Now, just a quick example here that I wanted to show in terms of, okay, as a finance department, how can I understand the position of my finance in terms of CapEx and OpEx? And that's actually mostly what they are after. Well, I'll just give an example. Because we manage projects in a consistent manner, digitizing that means that we, of course, have the true data across all of our initiatives. So in that instance, this is a list of all of my projects, of course, and because I manage finances in particular across my my organization consistent as a finance manager or as a finance department, I can go into this report ensuring that I don't bother anyone else. And I can say, hey, what's the position of CapEx versus OpEx in a given month? And I can now, of course, see the position of CapEx and OpEx. And you can even drill it down to the nth degree again per month, per categorization, even per items. Now, because the project manager maintains that information as the finance team, I can and should be able to report against that, which leads us a little bit later into the integration part as well. I just wanted to outline, by managing finance in Excel is super easy, and we'll come to the project manager and how easy that can be to manage. But ultimately, we need to make sure that it is flexible enough that we can handle either transactions or summary data in a time-phased manner, right? Okay. So again, from a finance team, just wanted to make sure that understanding why finance requires it in that form will resolve a lot of those issues. All right, now, again, from a program portfolio management perspective, there were the questions that came about. Hey, how can a project program manager reduce the effort in alignment with financial requirements? What do you think? How can a program manager or a project manager reduce the effort to align the financial requirements? Well, reducing the effort, obviously automating it, digitizing it on one hand, but I think the key here is understanding the why. Why do I need to classify my costs? Why do I need to provide my forecast? What's the importance of that? I think that's ultimately, if you bake this into your rhythm of a project manager, then the effort to do this is actually not so difficult. And the difficult part will obviously be the timing between my project finances versus my financial position at the end of the month, because quite often finance teams need, I'm going to say, between 5 and 10 days to, to close off a previous month to have all of the accurate figures into that. What are your recommended techniques to identify forecast budget for shortfalls of multiple projects? Well, by managing the forecast in the projects and being stringent about that and governing that is already a big part. Now, as a program and portfolio manager, you are actually the, I'm going to say, the beneficiary from the information that projects are managed, how projects are managed. Let me give you an example. Now, this time I'm just going to open up a portfolio report. I'm here. A program report again. I'll go into my program view in that instance. So I'm the program manager of a particular program, and you've seen this obviously on the portfolio level. It's the same look and feel for us because it's ultimately the same data sets. It's just differently structured, and I then have the ability, of course, to look at my particular program at any point in time. And you now have two options. You either ask your project manager to send you the Excel spreadsheets for their finances and you manually put them together, which very often happens, or you digitize the information, and in that instance the data will just automatically be associated to that program. So in that instance I can also see my forecast position, and I can see where I need to potentially manage that. So I can see, for example, in January till March, there is a forecast overrun in comparison to my budget. However, I do have still some budget available from the previous time. So providing that picture and then drilling into the details, saying, okay, well, let me have a look who actually forecasted that and why don't they have a budget? Well, right now I can see that in one of my projects, I have a forecast of 833,000, but a budget only of 83,000. So I can very easily identify that. I always give the analogy of the Titanic. You know, when they started in Southampton, of course, they wanted to arrive in New York. And as much as we as program managers want to ensure that the 10 million budget over the next 10 years is going to be spent that way, but it is really trying to predict the future. The further you try to predict the future, the more inaccurate it becomes. You have to come into a rhythm of actually doing the forecast on a regular basis to retain the likelihood of predicting that future accurately. And that's really what it's all about. Can a project be included under more than one program? Outstandingly good question. Ryan, what do you think?
I'm going to say the unexpected thing, yes, it can, but it depends on your definition of program, and it depends on who is thinking about it as a program. We often have the PMO's view of a program, the program manager, and that's what we're thinking of. But we also have areas where the construction manager, for example, sees all construction projects as being part of a construction program, or the person who is dealing with the New South Wales projects sees them as a program. So there are different ways of slicing and dicing it. So to directly answer what you're probably looking for is not really, because as the numbers flow up, do I send it to that program or that program? However, if I slice it in another direction, there are ways we can do it. So LTIS can actually do both. You've just got to define program carefully.
Thanks. Yeah, because the issue is not so much associating a project under different programs. The problem is within my program, I have information that needs to be distributed. Let's stay with finance. So here's a project and I've got my financials. And as you can see, I've got my CapEx and OpEx and I have my different classification, but within those different classification parts, sorry, this is budget. Let me just put this into forecast. That's a bit easier. Kick the budget here. If I go, for example, into my engineering costs. So if I would say, hey, this merger and acquisition project that I have here belongs to program 1 and to program 2. Well, ultimately what that means is you would have to determine the engineering cost, which part of that belongs to program 1 and which part of that belongs to program 2. So by splitting a project ultimately means that you also need to split the information to make it accurate. And that's the reason why most organizations says, you know what, that's just too much work. What we can do instead is we can say 30% of the cost for this project belongs to program 1 and 30% and 70% belongs to program 2. So there are different ways how you can determine that from a digital perspective, but ultimately it's important that we understand it's the business process. And why is it so important? Well, because my program 1 has a certain amount of budget and my program 2 has a certain amount of budget, and I need to make sure that they're equal or that they are accurately portrayed. Great, then that's a good reason why. So always ask the why, and that's really key. As a general guidance, I do not see it often that a project belongs to more than one program because it is generally associated to a primary program. If we, from a financial point of view, would need to split that, that then generally happens when in the financial world. Well, and then the project manager, just like the program manager, I need to get my budget approved. I need to stay within my budget. I need to understand what that the actual spend is actually mine and how much more I need to spend. So the classical straightforward thinking, as I like to say it, I've got a budget, I've got a forecast, I've got actuals, I need to stay within that. If I wouldn't have to worry about all of the classification, then it would actually be quite straightforward. So can you have a project management repository without clear and reliable data on project financials? Assuming that the answer is no, then how much priority would Sensei place on getting this element of a solution, for example, a status report, trusted, accurate, and reliable before investing in other elements like risks, issues, and benefits? I love that question because I get it all the time. What is your view on that? No view. Brian, what do you think?
Look, physically, yes, you can. And we do have some clients who do. We do in reality have clients who do not manage finances, or they have someone else managing it.
Yeah.
So it is definitely an option to do this, and it's a start. And I think that question whoever's written is alluding to, if you get people used to the idea of tracking, maybe they're tracking milestones. So it's first step in maturity. Track your milestones, introduce them to risks, introduce them to issues, slowly introduce more and more. So yeah, you can.
But I would also say that generally speaking, an organization either has an external body managing the finance, let's call them finance department. They have project controllers and project finance. So therefore, as a project manager, I just need to consume the information, which makes it easy. However, reality tells us that if I run out of money, I just can't continue anymore. So therefore, I believe that the financial aspect of a project is one of the most important ones. And in our experience, it's also one of the first ones that people want to get right. Yeah. On the nice note is, once you got the process sorted out, this is actually right all the time, which is really good. How to work around delays in financial reconciliation reporting. That's the last one I'm going to put here. I'm just conscious of time. So again, it's a timing question. If my finance department requires, let's say, 10 days to close the previous month to formalize the position of our organization of that previous month, well, then we just have to fit into it. I say that because we as project managers, we may even be hindered because we can't continuously maintain our actuals. But fact is, the reason why that is so important is because we form a puzzle piece of that bigger picture. So we just have to follow or collaborate with the finance department to ensure that that particular part is right. Now, because we are the project management, or the project managers are the one who maintain the information, I think it's super important that we actually provide an intuitive way of managing that, to the point that, as you quite rightly said, Ryan, we just incorporate and automate some of those process elements. Let me give you an example. So one of the examples is I created a project here, just a brand new project, right? And I call that financial process optimization project. It's just very fitting for this one. So I've got a details page. I've just had my my business case approved. Now I need to get my financials approved. I think the important bit is that financials should be able to be approved in a manner that that is intuitive. Now, in that instance, we have a whole bunch of different different data sets that we can manage. Let's just stay with the budget here, and I can actually request a new budget, and I can say, here's my, I'm just going to call it my CapEx budget, just for the sake of it. By incorporating these elements like financial category, that is actually a requirement for finance, we just simply put that as part of that. So in this instance, I may just put it under CapEx, or I may say, oh, actually, this is construction under CapEx. So you may have different levels. And then you have the ability to just simply create a transaction. And in my instance, I'm going to say, hey, I need, I don't know, $100,000 starting as of August, and I need that over the next 6 months, right? And I generate that, and it generates my transactions. Now it's interesting because quite often you don't get a budget on a monthly basis. They say, here, this is your annual budget. What we do, you can of course contour it if you wanted to, but in that instance, we just equally distribute it so that we have a position of how much, on average, how much budget we should actually spend. And there's now my budget. Of course, I can go through an approval process, etc. But as you can see, my budget will actually remain as just simply CapEx, whereby my costs below, there will of course be much different. So in that instance, I may say, hey, I need a travel cost, right? Travel. And in here, I'm going to say travel. Here's travel is actually an OPEX. That's for my department, and I'm going to add a transaction here, and I'll say, hey, in August, I'm going to predict that I need $10,000, let's say, for travel, and I may have, I don't know, a purchase order number, PO number, and have now entered my forecast. So because we have gone down a classification below my initial budget classification, I can of course aggregate that to a CapEx and OPEX, but I couldn't put that. Generally, you don't put a budget against these individual items. So that's why a budget is always managed on a higher level in comparison to the detail areas here. So as a project manager, I now, yeah, 10 minutes, thank you. As a project manager, I would now like to, enter and maintain that information. Oops, let me just refresh that. And I can see I don't have a budget, but of course, let me put in my forecast. I do have a forecast, and I could, of course, now just simply say, oh, look, and in September, I need another $30,000 because I fly first class. Oh, in October, I actually have 2 transactions that I want to enter in here. Is that possible? So we do have the ability, or a system should have the ability to have it on a summary level, or alternatively, you could actually say, hey, I'm going to add another transaction, and this could be for, let's say, the 4th of September, or let's say the 4th of October, of $10,000, and then I have another transaction on, let's say, the 12th of October or the 26th of October, and I can manage my transactions accordingly, again with potential PO number. So the intuitivity of maintaining and managing that information, I think, is really key here. So and again, for us, it really means the combination of managing it either on a summary level or bringing it all the way down to the transactional level, where I can then, of course, look at the individual transactions. So that maintaining and management of my finances over time with the associated information regarding classification actually includes that process quite heavily. And optimizes that process quite heavily. All right. Again, we've got very little time and so much to talk about. I wanted, in that context, to also talk about integration. Why would we want to have integration with our finance system? Again, we as project managers, we feed the financial department with the information that they require, and at the same time, finance actually provides us with the information we require, mostly actual data. So what quite often happens, and what lots of organizations do, is they actually start to they start to integrate. But before we go a little bit deeper into that, just another poll. How do you know the actual cost of your projects today? Do you say, hey, my finance department tells me that, or hey, I manage all of my finances myself? Or do we say, hey, our PPM solution is integrated with our financial system, or alternatively you say, well, actually we don't do that at all. All right, again, my finance department tells me, kind of makes sense because these are the people who get the invoices. Manage all my, so finance department again goes well into the lead there with 38%. And of course, I manage or the integration between finance and my PPM solution. So you can say well over 50% have that integration component. Just very quickly, integration makes a lot of sense. I often get the question asked, can I real-time integrate with my finance system? Sure you can. My question would be why? Finance will not be in a position until the end of the month to give you the actuals for your project. So therefore, getting that updated, let's say, every week so that you can check, and then at the end of the month getting it updated is a much more sensible approach than having these bookings in and out in real time, because you look at your project actuals on Monday and it says, oh, it's $3, and then you look at it on Wednesday and it is $100, and then you look on Thursday again and it may only be $5 again because they have misposted it or have an accrual, etc. However, the integration happens quite often these days. It's really quite normal and it's not that difficult anymore as long as you map your data sets right. From an integration perspective, I do this based on the Power App family of Microsoft Power Platform. That's sort of the digital solution that we have. So you of course have your finance system, and the finance system has data. We have data tables, of course, in our PPM system, and you literally then can even add additional data sets. For example, I want to have the list of all of my purchase orders in my projects. We simply create that entity and then have the ability to import that, sometimes through a staging table. But what that means is it will allow us as the user to see that information in our PPM solution at any point in time. I don't have to wait for finance. I don't have to ask for it. I don't have to find it myself. It just appears. When it comes to forecast, of course, forecast cost can then move into finance as well, so that that cash flow can be managed accordingly. With that being said, how many, Ryan, in terms of percentage of all of the customers that we have that do integration, how many do we integrate back into finance?
Back into finance. I'm going to say 30%. I have a different view.
Oh no. Say it again. We were gone for a second.
That's right. So I think forecasts going into finance, I think, is probably about 30%, less than 50% anyway. It's generally actuals coming from finance.
Yeah, because finance is very protective of that, of their system. So they have generally not so much an issue giving you information, but then putting information back into the finance system without having the check, I'm going to say, is often a reason why, yeah, I would say 6 times out of 10, we only do a one-way move, saying actuals and budget, sometimes into the PPM solution and not the other way around. So yeah, the technology these days is there. It is not as complicated as it used to be, I don't know, 10, 15 years ago. In our view, if you really want to make finance work, integration is almost a must. And integration, you have lots of automation. You just don't have to worry about it anymore. And that makes a very, very big difference. Now, I do have a couple of other demos. However, I did that as something to talk about. We knew that wasn't the case. I only have 2 more minutes. What I will do is I will actually do some of those demos in our second part after we have heard from our customers in a real world environment. A couple of questions here at the end. You know, how can technology assist a preparation of project financial forecast. Actually, really good question. Just very quickly, you saw the finance. I can of course maintain my finances here, but another big part for our finances is actually resources. Let's say I need to have a business analyst, and then I need to have a developer for a given amount of time. Let's say I'm going to propose my business analyst to work 100 hours in August and 100 hours in September and 100 hours in October. And then I have a developer that I need 50 hours. Now, these are all costing us money, right? And the way that we calculate that is based on the commitment or based on the request of our resources that I have. I can now just simply import the cost of those imports of those resources over time. So this one here allows me to request my resources. However, when I now go back into my financials, you will see it says, hey, there's some new information that you can import. We then have the ability to just simply import the resource costs. As you can see, these are 6 transaction entries for $90,000. I import this, and I have now streamlined my forecast by forecasting my resources, and my financial transaction just comes. And as you can see in our instance, we have already classified them to a particular classification that finance says, hey, all of our labor can always be written off. I put it under OPEX, under labor, and look at that, I can even determine exactly how much money and how that money is made up of. So there are lots of optimization parts and technology parts that can assist you doing those things. But ultimately it is make sure the process works on paper. If it works on paper, we can digitize it. 1:30. Now, before we run out of the room here, one more last thing. How do I manage annual budget cycle within an agile IT delivery? Again, this is a question that finance needs to answer, because finance needs to ensure that that position is always right. I just wanted to outline that only because you manage a project in an agile way, let's say, does not mean you do anything different in terms of financial management, because the finances still needs to be accounted for. I think the issue is more, hey, how much do I get for my budget in an agile world, right? That's the problem. Most organizations says, hey, I'm going to budget you for, let's say, 5 sprints, bam. And then you have a budget for 5 sprints and you can manage it accordingly. Okay, now we are running out of time. I wish I could answer some more questions and show you so much more. Be tuned for the second part of this webcast. I hope it was worth your while understanding terminology, understanding processes, especially between finance department and our project team, and open up for the last questions before we close off. Only 1 minute override. It's not bad for finance.
It's not bad for us.
Well, thank you so much for your attendance. Please keep on the lookout. We will share our slide deck so that you have that available as well. Look at some upcoming events and join us to the second part of this session. That would be awesome. Thank you so much, and back over to you, Gemma.
Thanks, everyone. As Ryan mentioned, we'll send out the recording to you guys this afternoon. But yeah, keep an eye out for the upcoming events, and we'll see you next time. Thank you.
Thanks, guys. See you later. Bye.